Hi, I'm Dick Van Dyke.
And I'm Eric Judy. And today we're talking about tax-free annuities.
Better get them while they last, Eric.
They're in limited supply. When they're gone, when the shelves are empty, they're all gone.
That's right. That's right.
So you better act quick.
Well, how about that? Tax-free annuities. Now, isn't that the opposite of what we're told? Stereotypically, annuities are taxed at ordinary income tax rates, and just like IRAs.
You know the CPAs are calling right now. They're
Yeah,
wrong.
yeah.
The tax-free annuity doesn't
Our phone's
exist.
going to be blowing up.
They'll tell you it doesn't exist. Now, I have not seen anyone advertising for a tax-free annuity.
Tax-free annuities, and here we have a limited supply.
That's right. So we've got them in short supply. Now, all right, Dick, you got to tell us, how does one get one of these limited supply annuities?
Well, here we go. What we have is no different than what you have, and that is you have your traditional IRA. That IRA can be converted to a Roth. Of course, you have to pay your tax, in the following year. So
they're not tax-free then.
Well, you have to pay the tax on the IRA.
So it's the tax first. Okay.
But once folks, that you've actually converted to the Roth, you can then put that money into an annuity. That annuity becomes fully tax-free. It can give you a tax-free income for the rest of your life. It can pass tax-free to your heirs. It can actually become a retirement account for your heirs. There's some intricacies to that we can talk about, but the idea of using a Roth strategy in an annuity is not that well known. It's not talked about that often, and it can be a great advantage.
So, we say limited supply. Why do you say limited supply? We've had Roths for how long?
Right.
So there's been a recent change, though.
Yes.
I mean, it used to be there was an income threshold out there.
2010, they wiped it out. Now you can convert if you make over 100,000. Doesn't matter. You can convert. But limited supply. I mean, we're having a little fun with this, folks. Like an annuity sale. But the limited supply really comes down to Uncle Sam giveth,
and Uncle Sam taketh away.
That's right.
And so, when someone's looking for tax dollars,
our government needs money.
If you believe taxes are going up, raise your hand. So, if that's the case, is it better to then?
It's likely that the Roth could be an endangered species. Roth
will turn to moth.
It could.
Going to the mothballs here very soon.
Getting poetic.
Yes,
here.
I'm trying to rhyme.
So if we're in this situation where taxes are likely to rise, the government's looking for revenue, the Roth advantage benefit could be closed, tightened up. What we've really experienced in the past, Eric, with various insurance products and tax advantages, as long as they were entered into legally and under IRS and government type sanctions, then usually those that got into them were grandfathered in. It's the new folks coming in that were somewhat penalized.
Yeah, usually they won't go back and try to take it away from you.
Right.
Usually. So right now we believe that if people get it in before the government decides that this money is too too tempting, we've got to kind of reach in there and get it.
We can't give these people this tax-free advantage.
That's right. Or their kids, or their grandkids.
Well, and that's where we go into it is in potentially limited supply.
Right.
So I think that folks, this is something that you genuinely want to consider. You want to use an advisor that really understands the Roth IRA and the tax advantages and the ways to incorporate that into an annuity. Because Eric, I'd like to point out another thing while I'm thinking about it here, is there's different ways to convert an annuity to a Roth IRA. I mean, you could use an existing annuity.
Right.
That's an IRA.
So you're saying if I own an annuity that has an IRA wrapper with it already.
Right. You can convert it.
I don't have to convert the annuity. I don't have to go get a new annuity.
You do not. You can actually convert that annuity into a Roth. And even better in some situations where you're doing proper planning and you know in advance that you're going to be converting this, you may want to go ahead and convert your Roth inside your present account, then transfer the Roth into an annuity if that was the purpose or the reasoning, pick up that 10% bonus tax-free, or 8% bonus, or whatever you get with the annuity. And again, as maybe you have an income rider.
I'm
getting too much going
I just
here.
got a tax-free bonus. You know?
Well, it's just the whole package.
Right.
Of being tax-free, and the fact that if you put an income rider on it, that you're going to have potentially future tax-free income, even if your account value goes to zero because you've lived a long life. Right. Your income just continues tax-free.
Yeah, and some of the, obviously there are this kind of the standard benefits of the Roth that you don't have to worry about RMDs.
That's right.
You know, so kind of the transfer of wealth tax-free.
Right.
So in many ways it powers kind of the life insurance. And one thing that I was looking at earlier was that kind of the Social Security tax aspect.
Yes.
So and the reason that comes into play with even with annuities with an IRA wrapper, a lot of times you're going to have to start taking those RMDs.
That's right.
They're going to kick that Social Security income level to a level that's taxable.
It really can push it up into that taxable.
So if that's one of the things you can potentially avoid by converting into a Roth, there's even sometimes that it's usually the rule of thumb used to be you want to be able to pay for that conversion, those taxes basically out of pocket. You didn't want to reduce your balance.
Exactly.
But some of the formulas that we've looked at actually said, you know, you could save more on the back end by not having those RMDs force you into a higher taxable consequence.
Exactly.
So now we're talking all sorts of fun things, but
well, I think a lot of it, Eric, gets down to, do we believe taxes are going to go up?
Exactly.
Or, you know, if you believe taxes are going up, folks, raise your hands. Okay, it's unanimous. No holdouts. No, most rational
and some irrational
folks believe that taxes have no place to go for at least for the next 10 or 20 years but up. And so it's a perfect place to look at a Roth and say, you know, whether I'm going to use the money or I'm going to pass it to my heirs, I want to protect it from increasing taxes.
Yeah, if nothing else, it needs to be one of the things that you consider for your retirement future.
Right.
Is how it will impact. So work with a good advisor.
Yes.
Discuss the possibilities, and it should be one of those pieces that's on the table.
Absolutely.
So taxes are going up. Limited supply.
That's right. Get them while they last.
That's right.
Thank you.
Have a great day.